Meta is out of the trading tip portfolio after a whopping 62% profit. And in this week's trading tips, you will hear me argue for golden oil. You will hear me say that I will go into Chevron and Barrick Gold. But more about that in the trading tips, which is at the end of the podcast. You are listening to the StockInvest.us podcast, Trading Tips with Jim. And for the next 30 minutes, I will tell you what I think will happen in the market this week. For instance, Powell will talk tomorrow and everyone will pay attention to what Powell will say, because he will probably comment the strong job numbers on Friday that made Nasdaq fall on Friday. And there will be a lot of other information I will tell you about the signals, how I think the week will go. Before, at the end of the podcast, we will get to the trading tips and you will hear how last week went for the stocks in the portfolio. You will have my new tips for the week ahead of us and a few other tips and tricks as well. So stay tuned, because right now you will have the market section. What a special week last week became. Highly volatile, just as expected. Nasdaq up 3.3%, Dow Jones down 0.15%, up and down during the week. And as I just said in the intro, Meta is now out of the trading tip portfolio after a whopping 62% profit. And if we just dive quickly back to last week, I told you I keep a trailing stop loss on Meta. I was expecting Meta to be sold, but as I said, you never know. It can just skyrocket, and if it does, I want to be on that journey. And it was the quarter results for Meta being much better than expected, pushing the stock up in an insane rally. And I think Meta was almost up to $197 or something before starting to fall back. And then it was cut by stop loss, giving me, as I said, 62% profit. And Fate did very well, and America did very well. So last week became extremely good in terms of the trading tip portfolio. But we will get back to that at the end of the podcast, where we'll talk about the trading tips for the week ahead of us. Now, I was expecting a red week last week, and I became a little restrictive. I didn't increase the amount of stocks traded over the week in the portfolio, because, as I said, I expected a red week of the market being extremely overbought. In that situation, you usually have a reaction down, and strong profits easily go away. To prevent this, I try to predict some long-term trends and stay within these. I might be wrong one week, but usually I then get correct some weeks, some following weeks, so the total sum will be much better. But for 2 weeks in a row now, I've been wrong, expecting a reaction down at Nasdaq. But just keep pushing up, especially driven by the major stocks. It's been Tesla and it's been Meta last week pushing these major tech stock. Apple, for instance, had also a strong week last week. They are pushing the index up. Several other stocks are actually starting to fall. And when we get to the signals in just a few minutes, you will hear me say that across the board, the buy signals are falling from 41 to 36, so things are happening. Again, I will bet for a red week, because being this overbought, there has to be a correction. Sometimes it's enough with, like last Friday, where the job numbers came in very strong and market reacted instantly down. And if you are not too familiar with all the things related to stock trading and what affects the stock and the market, etc., and you wonder, so how can it come that good, strong, solid job numbers. United States being at the lowest, I think, in 50 years. Unemployment rate, how can that be negative for the markets? The reason is that the economy is still strong. The buying power is still strong. We have several signs saying that it's decreasing, but the job numbers came in much stronger than the market expect. Earlier in the week, last week, Powell was speaking. He only increased the interest rates by 0.25% and said that we might see the top of interest rates now. That caused the market in total to go up last week. Then Friday's job number came very strong. And that means that most likely Powell have to adjust his words. And he will speak again on Tuesday. So be prepared for tomorrow, for the Tuesday, because Powell will have an interview. And many people will follow what he says, because he probably will comment the Friday's job numbers and give a clue what awaits. But everyone seemed to expect that, okay, we will have to keep increasing the interest rates, and the markets really do not like that. What happens when interest rates go up is that money go out and into more secure items like interest rates, bonds, yields, etc., where you have a guaranteed return on your money. Anyway, strong week indeed for Nasdaq, strong week for the trading portfolio. I just said I think it will be a red week. But we will still run through the things that will happen this week before going to the trading portfolio. The biggest news maybe is, of course, that slightly increase in tension with China over the spy balloon that was shot down in United States. This just built up around the pattern. For those following me a long time know that I believe the Taiwan conflict will come up this year. I expect it in the first half of this year, actually. And many years ago, I told you that the Ukraine conflict would come. It came. And I also said at the same time that in 2023, I think the Taiwan conflict will come. The spy balloon and the tension that is now is just building up around this same pattern. You have to understand that if tension increases more, it's already tense in Ukraine as more weapons is being pushed in. There is expecting a huge offensive by the Russians any time these days. There is a huge potential for escalation. The geopolitical situation is still not in favor of the stock market, because if things start to escalate in more negative way, the stock market again will be hammered. Some stocks, of course, may do very well during this period, and again, I can just recommend, as I've done for years now, the war industry. Anything war related will do good because everyone is arming up. So tensions is moving. We will have Powell talking on Tuesday. In addition to this, there is a continuous flow of quarter results, and these will of course to some degree affect the markets, because everyone is looking into the quarter results. But quarter results across the board is showing the same decline. So the quarter results are going down, the profit margins are getting less, so that remains just the same. This will eventually also put a toll on the stock market, but if you do understand that the stock market usually turns long before the fundamental market, because you expect these things, it's just if it gets worse. And what are the worst things that can come? The one worst thing that can affect things is if the inflation is not under control, that it keeps pushing up for some reason, either by energy or other reasons, supply caused by some tension, more tension in the world, and some supply chains problems from China, for instance. You never know, China suddenly put on some restrictions, you will have some supply issues, and again we can have that spiral. So you have to keep an eye on that. But during the week there will be, as I said, many earnings coming out, and you have to make sure that you know when your stock will come, because there will be huge swing. You saw what happened to Meta last week, and it for sure will be many others. Here are some of them. Activision will be today, Pinterest will be today, and Tyson Food. Food been doing very good. It will be interesting to see what Tyson Food will do. Tomorrow will be BP. You can just expect from BP, DuPont, etc. that they will do like the others to post very good, strong results. Hertz, interesting company. Are they getting back to track after being more or less bankrupt just 2 years ago? And what about the Royal Caribbean cruise line? Is the cruise line industry again up? It just continues through Wednesday. Tons of big companies coming out. Robinhood is maybe the most interesting for the day trader. You can expect some movements there. Uber will also be, and Walt Disney, for instance, and Yum Brand, which we have up in this podcast a few times. Thursday will continue with PepsiCo, Ralph Lauren, Yelp, VeriSign, etc. AstraZeneca will be. So it's just a week full of quarter results. And as I said last week, and I will repeat this week, many of them have the possibility to move the market as such. If they come in very negative, it can affect the market and the pessimism. I think there will be a lot of somewhat bad quarter results, and I think, as I said, I argue for a red week. Oil fell $5 last week, down from 79 to 74. It was Friday that caused that mayhem. And oil stock also fell hard. Now again, I think oil is very attractive. I will be chasing a little bit of oil stocks now for two reasons. One is that I think the correction that has been now is somewhat okay. Last time we did it, don't remember how many weeks ago, but it was a similar situation. Oil getting down very low. We've got into Chevron and did a very nice trade in Chevron. Now I think it's the same time for it. The other thing is that they are high dividend payers, and I think if we get a very terrible market, I think that the oil stocks in general can hold good up. Gold also was doing very good. It was up at 1950 or something last week, but fell on Friday as well by $46 down to 1,892. Remain very bullish to gold. I believe gold will head up to 2,500. Since I believe it's 1950, there has only been extracted 208,000 tons of gold. And the gold production in general is getting less. It's a very interesting situation, as we see also a lot of countries moving back to gold as standard, trying to get away from dollar, as we've discussed many times. I think gold is a good place to be. Personally, I'm there in several different ways. Some gold stocks, but also into pure gold as well. 10-year treasury yield went up a little bit last week, and when 10-year treasury yield go up, stock markets go down. Now, these are the fundamental things. The technical things, which I usually let decide all of it, I mix together the fundamental view with the technical view and try to come up to a conclusion. And again, because I know there is always many new listeners to the podcast, if I expect a red week, I am not as aggressive as I would be if I expect a green week. So that's how I deal with it. I reduce my exposure a little bit or increase my exposure a little bit still, because the markets is like they is. If I look at my overall portfolio, I still are very, very low into the stock market in general. I pulled off most of it when Nasdaq was 16,000 points because it was overbought, and I expected a reaction down. And we've been in this bear market for quite some time. We went all the way down to 10,000, At 10,000, I slightly started to increase the exposure a little bit, but it's still relatively low. Once I get that strong confirmation that we are into a bull market, I will increase my exposure more in the stock markets. I have much cash waiting in the bank account, ready to be invested. Yes, I will lose out of some gains, but you have seen, I just picked Meta 62%. We are raking in money, and as I told you, I think this year will be even better than last year, which was as strong yet. So once I am sure that we are in a bull market, I will invest more. Until then, I will keep that same strategy short term for the week. If I think it will be a red week, I will not go as hard that week. And I also look at the longer lines. Your next question is probably, so exactly when do you say it's bull market? If you look at the Nasdaq, it's up 4 weeks in a row. Well, if you just listen to this podcast, you know that we had enough risk in the stocks we've been into. And we have enjoyed I am more up than Nasdaq is in general over this week. Much more up. I could have been much more if I invested much more. But as I told you, there is never a guarantee. And I trust strategies much more than I trust my gut feeling. So trying to stick to the strategy. And my strategy says that for me, the bear market will be broken when the downwards trend is sufficiently broken and there is established enough previous bottoms higher than each other. That is for me the signal. There are several signals who any minute now have a quick look at the chart, but there are many signals saying that this might just be the case. But still we are in the top of everything. Market is overbought, and in all these years I've been doing trading, there is usually a strong reaction down. And as things get as overbought as they do now, small things can cause really huge falls. And yes, there is tons of support below today's level, but this can be broken, especially when market is as high as it is now, because you just have an overreaction. People just go frantic in selling to save some profit. Just imagine all the profit made in Tesla for those getting in when I told you that it was time for Tesla trade. I think it was week 1 or 2. And I said, now it's time to trade Tesla. It was down almost at 100 something. Now almost up at 200, almost double. All this money. When people get the fear that things will turn, they will sell off whatever they have, and you can have those huge, strong falls. And just to end that, before we look at the signals and the chart, every single bear market I ever experienced have ended with some huge falls, signaling the end of the market. I still haven't seen that yet. We have to go back. I started this podcast when it was the beginning of the pandemic. Market was falling way too much, and then you had these 3 insane huge falls, and I told you just buy for whatever you can, because this will be an insane upturn, and it became an insane upturn. Now that was forced, a reaction forced by, of course, the pandemic that happened. Now again, it can be some geopolitical situation causing it, but we are in an overbought territory, and there that is just that mix that can cause this huge fall. Usually I like things to move more steadily, slowly upwards. It's much more predictable when things are high, because when they're high, they can just continue upwards. There is nothing saying that Nasdaq now hit 12,000, can easily go up to 13,000 in one straight run, and that will many shares will double during that period. So it may very well be the case. Across all the stocks that we analyze, more than 38,000, I think 26,000 being qualified for analysis, 36% of them are giving buy signals. Down from 41 last week. We see some falls in some other markets. That's the reason why it's going down. Nasdaq is down from 46 to 44, still extremely high. New York Stock Exchange down from 51 to 48. In general, we want these buy signals to go down, because when they are as high as this, the markets is way too overheated, and the reactions, the volatility increases too much. Day traders, you will love volatility. You want the opposite things. You want these things to remain high, and if you are strong enough that you go out on the strong upturn before it falls down and rebuy on the red day, exactly what you want. There was tons of trades to be made in, for instance, Tesla or even Meta moving up and down last week. And we'll just spend 1 minute on that. How do I trade if I trade intraday? Now, if I follow a stock and it's on a strong upturn, I usually let the volume decide. If the volume is topping during intraday, then I believe that the stock is ready to have a reaction back. You can use, I love also relative strength index, MAC, and other indicators that will show when the stock is overbought, especially in combination with volume. And you can flip positions. Happens from time to time that I do a little day trading, and I set swing trade where I go in and out of the stocks, just scalping on the $1 or $2, depending what kind of stock it is. If it's like Tesla or Meta, or a little less if it's one of these penny stocks. But in general, I try to play swing trades with the bigger stocks because the movements is more predictable. Now back to the signals. New York Stock Exchange has said from 51 to 48. London from 42 all the way down to 29. Tokyo from 41 to 36. And Shenzhen, China from 55 to 27. What does this fall indicate? Well, it indicates to me that the skepticism is increasing in the market, and you can have the mix that will finally show the falls. But let's, as always, have a quick look at the chart. And we will let the chart speak and come to the conclusion. I already told you it will be a red week. I have watched the charts before. We are extremely overbought. We was extremely overbought last week. Relative strength index remain high. I told you it could happen, and you can have a strong upturn. Now markets are reacting down. It's currently at 12,000, some support at today's level, but the real support is around 11,600 all the way down to 11,000. Very strong support. I expect a reaction down there. It can happen in a day. It can happen over several days, with the possibility of bouncing up. So I will not be surprised if the week starts red and ending green. It's a fair opportunity, but there will be a reaction down. In my opinion, we have to see 11,600, maybe less, during the week with a reaction up, and that's especially the reaction up we are interested to watch. Buy signal short-term moving average, buy signal long-term moving average, and in general things start to look a little better. Quick look also at the 12-month chart. If you're listening to this on Spotify or wherever it is, it's also available on YouTube, where you will see me and you will see the charts. Looking at the long-term chart, we are totally overbought. Now starting the reaction down, we have broken the trend. The trend is a little, not the best trend. It's a very clear trend, but the trend line in this picture is not the best I've seen. But the indication of a possible trend change you can see if you look around November, where you have three bottoms just above 10,300. There are three of them more. It's more like a horizontal move, and it's always a good sign. Now, usually you have a reaction back to the top of that formation, which will be around 11,000 before pushing up. So there are signs in also the long-term chart that we have a possible trend shift coming up. It's still not confirmed. Everything in this chart, everything in the short-term chart says that we will have a reaction down before going up again. I'm betting for a red week, and now I will just tell you what and how will I play that red week. What are the trading tips coming up right now? We start week 6 with one stock out of the portfolio after Meta was sold by trailing stop loss last week. But before we head into this week's trading tips, let's just quickly run through the stocks in the portfolio. Because as we left last week, we had 3 stocks. We had Zomerica, we had Fate, and we had Mullen. Sometimes I feel I keep repeating myself, but it's because, as I said, I know there are many new listeners every week. So every week I give the trading tips, and I actually buy the stocks that I say, and I keep them in the portfolio. Usually I buy them on the Monday, so I give the tips today, and I try to buy the stock as low as I can during the day, and just tell you how it performs. And usually it's sold by trailing stop loss. That's my preferred method. Sometimes I have reasons to sell, but in most cases in this portfolio. And that is just one way that you can track my tips and my recommendations. I do a lot of other trading outside this. This is just what I call the trading tip portfolio for this podcast. Sometimes we buy stocks and we have to sit in them a long time, and that was the case with Zomerica, which we bought in week 34 at 26 cents. Was up a little, then started to fall. It was the only stock, and still the only stock, that we buy without stop loss, because it's very volatile, and when it starts to move, it usually goes so fast that it's very hard to get in. I expected it to move before Christmas. It didn't do. Actually it fell, and I've been telling you ever since that it's still a good buy. It was down at, I think, maybe 18 cents. We were in a huge loss, but as I told you, when it starts to move, it will just go very fast. And we are back in profit because now it's 28 cents, so we are up at 5.6% profit for Zomerica. And you may wonder, is it a good buy still? Yes, I think Zomerica is a good buy. This is penny stock, this is high risk stock, and this is just should be a small part of your portfolio. Because it can go illiquid for a long time, and of course it can fall back. It can even get back much more, and it moves a lot, very volatile, very up, very much up. I've traded Zomerica so many times and made so much profit on Zomerica, so for me it's a little bit different game. But as I told you, I think this one will rally upwards to $1, and I want to be in if it happens. So Zomerica, it's in the portfolio. Then during this next 2 weeks, we were buying shares in and out of Meta a few times, strong profits in and out of XBEV. Maybe you remember Mullen, did very good trades in Mullen and kept on going. Chevron, we did in and out, but in week 51 we got into another stock, the third or fourth trade in Meta. That time, after selling around 120, we got back in at 115.29 in week 51, and I saw a huge potential upside because my real target was $140 or $150 for Meta. Was very obvious to me. And since week 51, Meta has just slowly gone up, never enough down to be cut by stop loss, just moving upwards. And for the last 2 weeks, I was expecting huge enough fall for Meta to be cut, but it didn't. It kept within the margins and just moving up. But last week, it rallied off on the quarter results, going all the way up to, I think it was $197 on the Thursday. Dropping back, hitting my 5% trailing stop loss limit, sold at $187.3, giving 62.46% profit for Meta. And you have to understand that in this trading portfolio, I cannot keep all trades the same amount of money. Meta was one of these stocks where I had a higher portion on money simply because it's a more trustworthy stock than, for instance, America. So it was a higher portion of previous profits into Meta, making that very, 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 very strong profit. Now we move forward to week one. In week one, we bought Fate at $10, and the story goes. I put on a trailing stop loss, and during the week, Fate announced that it was getting out of the contract with Johnson & Johnson, and that was published after trading hours. And when the stock opened the morning after, it was down 66%. Stop loss was never triggered and fell all the way to $4. And as I told you that, now it is just about a rescue situation. I believe that we will have to take a loss in Fate. It was the biggest loss ever in this portfolio, but I think that we can regain some of the losses because it was totally oversold. There was many reasons to believe why it should go up, either to $6 or $8. These were the two targets. And last week it moved up to $6, and I told you I think it still has potential to move upwards, and it did, ending the week at $6.87. So that huge dreadful loss is still huge. It's down 31% so far. And I think still we can squeeze out a little bit before we sell Fate. But for sure, Fate, in my opinion, we will have to take a loss. I just want to reduce it as much as possible. So strong week for Fate as well. I think it was up some 15% a week over week or something for Fate. So Sumerica still in, Fate is still in, and these are not two positions that I really like to be in. It's okay to be, but in general I like to have at least one or two more solid stocks into it. Now I told you I think it will be a red week, and usually I do not overexposure myself because it's the way to lose money. You should stay restricted. We stayed restricted for many weeks, just enjoying that upturn in Meta and etc. Now I also told you that Meta trade leaving 62% profit. So much profit, I will put some of the profit aside, but I also will increase into 3 stocks. I found 3 stocks which I think will do very good. One I will do outside this trading portfolio, and that is Mullen. As I told you, when Mullen was 20, just buy it, goes up to 40. We've done a few Mullen trades, but lately I stayed out of them in the portfolio simply because I have Sumerica and Fate, which is already way too high risk. Mullen currently trading at some 41-42 cents. I think it can continue to push upwards. It's highly risk, but I go outside this trading tips portfolio. I will continue my bets in Mullen. So for the trading tips portfolio, I have 2 tips which I am going to look. I don't know if I will buy them exactly today. I will have to check because I want to get into the lowest price. I expect a correction down. I think it can be strong, and that can give me an even better position. The 2 things that I want to get into is gold shares and oil shares. As I told you, if I'm correct, markets continue to go down, I want to have my losses as little as possible with the potential upside. I gave you a few hints in the previous section, but Chevron, I want to try the Chevron trade again. Every time we made Chevron, we made money, and I think I can do Chevron again. Not hunting the biggest percentages here, but I think there is a potential upside in Chevron. So I will hunt Chevron. Usually the best trade is half an hour to 45 minutes after the stock exchange open. I'm not sure if it will be today. I cannot promise it, but I will try to find that sweet spot for Chevron. I will look at the momentum of the exchange, how it is moving. If it's just a constant down, I will wait for maybe tomorrow, because then we'll have a following red day. If it goes down, then started to bounce up and show more volatility, I might just pick up on the trade today. The other stock which I will get into is gold Barrick. I think it is Barrick Gold. Simply because I think gold is undervalued, and anyone listening to this podcast know that I recommended gold stock for a long time, and Barrick been just going up. Now it has a natural correction down to the bottom of the trend, shows very low RSI. I like all of that, together with Chevron, the same thing. I think that gives me enough support on the downside with a potential upside. So I will get into Chevron, CVX, and gold, GOD. That's Barrick Gold. These will be the tips. So the trading tips for the week last week. Sumerica, which I think is a good tip, is already in portfolio, will stay in portfolio. I think there is more to gain from Fate, but I will not recommend you to buy Fate at current level too high risk, so it just stays because it is in the portfolio. The two trading tips, new, Chevron and gold, Barrick Gold. So that will be 4 stocks in the portfolio. Keep in mind what I just said, that huge profit from Meta. I reserve some of it in the bank. So the total amount of money which I go into this week is the same amount as I had last week. So I'm not going in with more money in total, simply because that huge profit in Meta is pushed out, and I spread the remaining over 2 stocks, Chevron and gold. I think that I have somewhat balance in the portfolio. Hopefully markets will just continue upwards. Hopefully there will be more green and you will bank in a lot more money. As I told you all over again, trading this year will be much more fun and much easier as that very strong bear market is over. I expect some downwards movements to finalize the end of the bear market, but in general the year over the year will be much more interesting. Maybe you already see it in crypto. For those following the podcast know that I have built up a crypto portfolio. I've been buying a little bit as it was going down. First time, for instance, Bitcoin at 30, later at 20, a little bit more at 17, and done the same thing with Dogecoin and a few others, because I think there is an upside, small side project there. And you see, these things are going up now. Hopefully they will continue. But in the back of all of this, remember that geopolitical situation. I have seen profits come and go many times, and I do not want that for you. This podcast, 4 years now, it's the 4th year I'm doing this podcast. My total goal for this podcast have been to help you increase your gains, reduce your losses, trying to teach you many things as we go, try to make your thinking a little bit more critical, enabling you to do better picks. Some of you over all these years have probably had many upturns, many downturns, as is. But the best tips, again, I can give you: use stop loss. Sometimes hard to find how big it should be. I love trailing stop loss. To make it easy, I kept this portfolio around 5%, but you should look at the volatility of the stock so it doesn't get cut short too fast. You have to allow something, but that will help you because, as I said, profits come and sadly they go. Strong profits can be vanished over a single day, over a single word from Powell or Putin, or even if China says something, we can have totally bad markets. It's a part of the risk, and if it happens, you just don't want to lose so much. Now, that is the end of the podcast. A lot of small talk at the end. I hope you will just have a good week. We are getting into spring here in the Eastern Europe where I'm sitting right now. Slowly, bit by bit, the days will get hotter. We'll have a small period of cold. but the sun is starting to shine more and more. And if you're not able to get sun and D vitamins, you will get a lot of good vibes spending time with friends and energy, because be prepared, this will be a top season for trading. I'm pretty sure about that. Until next week, again, have just a beautiful week. We will speak. Bye.
Welcome to StockInvest.us podcast. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.us. By using the information provided